I'm with William Curtayne, Portfolio Manager at Milford Asset Management. Great name for a New Zealand asset management company, Will.
Thank you. Pleased to be here.
I believe it's your first time speaking at the Investment Leaders Forum New Zealand, and it is a great pleasure to have you here. Could you summarise the portfolio that you work on and its core principle?
Yes, thanks. Yeah, so I run the Milford Australian Absolute Growth Fund. It's Australian equity product, so ultimately we want to deliver equity type returns, but our key is the journey and the pathway we take to getting those returns. Our key focus is to give investors something different by having lower drawdowns and lower downside capture. So that means we're going to participate in the rallies, but really soften the blow of all those pullbacks.
What's the parameters of the fund in terms of capitalisation?
So we can go all the way down to $200 million market cap companies, or even smaller if the liquidity is there. We go all the way up to large caps. So we can go across the whole spectrum. Tend to be about 20% in small caps, the rest of it in large caps. And we can go all the way up to 50% cash if we really want to protect capital and be safe.
Will, many clients would be worried about market conditions at the moment and headlines, and they'd talk to their advisors around generating some protection or wanting to be assured that there is some protection. Do you actually see the current environment as particularly risky, or do you tell clients it's too hard to time markets?
Timing markets is very difficult, so that's why you got to have a process around when you're cautious, when you're less cautious. We think you're getting to a period of markets where you need to be getting a little bit more cautious. That doesn't mean we're thinking an imminent drawdown is going 25%. It doesn't mean the volatility we saw last week is going to go further. But it means we think over a 12 to 24 month horizon, you're getting in the period of time you will see some larger drawdowns and some poorer returns. So for us, that means if you've got a long-term horizon, who cares? You don't need to worry too much about it. But if you're invested and needs cash, possibly in the short term, then that's when you've got to think about de-risking or some low-risk strategies.
So in that task of achieving downside protection for some of the clients that are worried about the short term, what is your approach, and where do you look for the negative correlations that will be protection for the portfolio?
Yeah, first and foremost, remove what's the most high beta crowded area of the equity market. So the sectors, that's probably trimming some AI stocks, for example. In Australia, it's trimming some banks, the ones that have led the rallies and tend to have the most risk. We'll hold a bit more cash, and if volatility is cheap, like it was up until 1 or 2 weeks ago, we buy some put options that play out really well when those markets have sharp falls.
Presumably you're agnostic around sectors and weightings. In an unconstrained portfolio, what data points do act as triggers to reassess your holdings?
Yeah, we use a 5 Ps approach, which is 5 factors that explain a lot of market returns. One of them is positioning. So when market's crowded one way, whether it's US technology shares or whether it's crowded into bonds, then we're going to be cautious on that asset class. Other drivers into it are the valuation versus historical norms, and other opportunities are pretty important as well.
Across this wonderful event, Will, we've heard so many views on markets, and moreover, we've heard how to frame these themes for advised clients. What have been some of your takeaways from the Investment Leaders Forum?
Yeah, obviously, I think a lot of people are surprised about the client questioning and the volatility last week. From a personal lens, I've noticed that a lot of friends and family asking me about the market downturn, acting like this is a 20% drawdown. We've only seen 6 or 7%. So I think there is a little bit too much pessimism out there in some of the retail investors. Advisors are sort of a bit more warning against don't be too pessimistic. There's still a good conditions ahead. And there's a little bit of focus on longevity and how to do with a lot of people have aging clients of this forum, and how to protect against some of that inflation or longevity risk, and what asset classes can achieve that.
William Curtayne, Portfolio Manager at Milford Asset Management, thank you very much for participating in the Investment Leaders Forum.
Thank you.